Should you stick with generous yield UK dividend stocks, or should you look across the pond at US dividend stocks? If you are a UK investor, then this is probably a question that you might have came across in the past. On the one hand, UK companies are very famous for their very chunky dividends, and on the other, US firms have this culture of having steady dividend growth with the famous dividend aristocrats. So which one is better? Well, today we are going to break it down using hard data, real examples, and a bit of common sense. We'll cover everything from yields, historical returns, and growth rates, all the way to taxes and risks involved. And by the end of the video, we'll talk about strategy and I'll give you my own personal, brutally honest opinion about this topic. As always, this video is not financial advice, so please don't take it as such and always practice due diligence when investing. Alright, let's dive in. Let's start with the philosophy. In the UK, dividends are part of the culture. The FTSE 100 is stacked with companies in the oil sector, banking sector, and insurance. Basically, big mature firms that prioritize paying profits to their shareholders. The yields are often very generous and they can range from 4% all the way to as much as 10% and above. In the US, however, it's a bit different. Yields are much lower and the S&P 500 averages around 1.5% in the yield. But here's the thing, American companies love to grow their dividends. US firms have shown time and time that they can sustainably grow dividends year over year. That's basically why we have the dividend aristocrats list. Companies that have raised their payouts for 25 years and above. Think of companies like Coca-Cola, P&G, Johnson & Johnson, and so on. You get the idea. So that's basically a general overview of the culture behind dividends here in the UK and in the US. Now let's bring some numbers into play. Over the last 20 years, if you've invested in the FTSE 100, your dividend would have been solid. Yields have averaged around 4%, but the growth was a bit patchy. And with regards to total return, so that's the company growth plus the dividend payouts, has been a bit underwhelming in comparison to the US. Simply put, the S&P 500, despite lower yields, has delivered a much higher return. And that's predominantly because earnings grew faster, and as a result, dividends grew faster, and capital appreciation carried the big bulk of the returns. However, there is something that we probably should consider as part of this conversation. Now let's talk about pounds versus dollars. US dividend stocks do come with a disadvantage. If you buy US stocks, you are naturally going to take some currency risk. Your dividends are paid in dollars and then converted to British pounds. If the pound is strong, then your income shrinks. And if the pound is weak, then you get an extra boost. And although historically the pound has generally become weaker in comparison to the US dollar, it's still a risk that's worth taking note of. So you never know what short-term fluctuations can do to your own portfolio and to the dividends that you are receiving. Let's quickly cover tax. Dividends from UK companies are pretty much straightforward. You're just taxed under normal UK tax rules. As of now, the dividend allowance in the UK is £500 per year. And then once you exceed that, you'll start paying tax on your dividends. And this is of course assuming that you're not holding your portfolio inside the stocks and shares either, because if you are, then this entire conversation is irrelevant. Well, technically it's still a bit irrelevant because there are some taxes that you can incur even if you are inside an ISA. But it's only with US dividend stocks. Because with US dividend stocks, there is a 15% withholding tax straight off the bat. The only exception to this rule is if you are holding your shares in a SIPP, which is a self-invested personal pension account, which is one of the few account types here in the UK that benefits from a tax treaty between the US and the UK. So if you are receiving US dividends, you are still going to be liable for a 15% tax, even if you are inside an ISA. Now, here is a harsh reality. Unfortunately, UK dividends have a history of being cut. In 2008, UK banks have basically slashed payouts overnight. In 2020, regulators have told banks to stop paying dividends completely. Whereas on the other side of the pond, the US dividend aristocrats have an incredible record of never cutting. Dividends kept rising in 2008 and during COVID and during many other challenging times. And the thing is, to some UK investors, that reliability really matters, especially if dividend income is relied on for lifestyle. Now, zooming out a little bit, it's also about the economies themselves. The US economy has grown much faster than the UK one over the last 50 years. Basically, they've beat us at everything. Higher productivity, stronger population growth, more innovation, and a much bigger technology sector. That growth flows to company earnings and in turn, dividend growth. The UK economy, meanwhile, has been slower, and so are its company earnings. Now, I just want to clarify something real quick because the goal of this video is not about picking one over the other. The ultimate priority is you, my friend. All I care about is what's best for you. And I'm only saying this because I know someone who might like UK dividend stocks over US dividend ones, or vice versa, will attack me in the comments. I mean, I'm just a comparison guy. I'm not really taking any sides here. I'm just kidding. Obviously, if you want to write something in the comments, whether it's positive or negative, you are more than welcome to do so, and I would love to hear your opinion on this topic. But speaking of opinions, let me actually give you my own personal one regarding this topic. So I just want to make something incredibly clear, and this is more of my recommendation towards your mindset of how you should think as an investor. You see, UK dividend stocks and US dividend stocks are nothing but vehicles towards your goal, and that is the thing that should matter. As investors, we shouldn't be attached to one vehicle. The vehicle doesn't matter, it just gets you there. And the reason why I'm saying this, and I'm stressing on it, is that vehicles that are working today might not necessarily be working tomorrow. And so if you have the mindset that the goal is the only thing that matters, you will be open to changing vehicles if necessary. However, if you are attached to one vehicle, you might actually end up shooting yourself in the foot, because by then you might be too attached to something that might not be in your best interest, something that might not get you to your goal in your desired time frame. And so I hope I've made this point clear, because what I'm trying to say here, I don't care about UK dividend stocks or US dividend stocks. I only care about what delivers the returns for you, my friend. It's not really the best investing strategy to have a personal attachment to one over the other. And I understand there might be other reasons why you might want to prefer one over the other. Let's say, for example, that you want to support the UK economy and you'd want to invest in UK dividend stocks over US ones, even if US ones might be delivering better returns for your case. If you are consciously making that decision, then that's absolutely fine. And you definitely can go for UK dividend stocks in here, for example. But going back to the point of which one is best out of the two, I would say the data is pretty clear that US dividend stocks are much better when it comes to growth. You will get paid less dividends along the way, but the overall speed of capital growth is much faster. And we all know that to get a decent dividend income, you need a large amount of capital. And all the data at the moment shows that US dividend stocks will get you there faster. However, if you already achieved that capital and you want to maximize your income, then in this case, UK dividend stocks come on top. You're going to get way more income from UK dividend stocks than you would from US dividend ones. And so if you're in the process of growing the capital that will pay you in the future, then US dividend stocks come out on top. And if you already build the portfolio of your dreams and you're looking to reap the benefits, then UK dividend stocks might give you way more benefits. And I know that UK dividend stocks might have a special place in the heart of most UK investors. And maybe you want to support the UK economy by investing in UK stocks. But on that point, I just want to say something that hopefully you'd think about after this video. And this is a quote that I've heard in the past and it really resonated with me. And it goes like this: "You cannot help others if you're broke." And in the context of this video, you want to grow your portfolio first, and then you will have a much better chance at helping the UK economy. And by the way, this is probably the sort of topics that we will talk about in a community that I'm planning to launch soon. A community of UK investors who are serious about investing and financial freedom. A place where you can ask questions, share experiences, and perhaps attend live workshops with me and other members of the team where we can talk about investing and personal finance. And so if this sounds great to you and you are interested, then you can join the waiting list for the community by either scanning the QR code somewhere on screen or by clicking the link in the description or in the first comment. In the meantime, I will see you later, my friend.